All right. So, Harry, how are you doing, my friend? I hope you pretty much sorted out and that you can hear me well. Can you hear me, Harry?
Excellent, John. How are you?
I'm doing fantastic, my friend. I'm doing fantastic. So, look, welcome again to this specific event. I really appreciate the time that you've taken. Speak about the latest trends, or actually the latest global crypto institutional trends, of which I am really keen to hear and listen to what you got to say. Please, Harry,
Well,
take the stage. Go on.
excellent. Thank you very much for that. And first of all, very excited to be back in South Africa. I always say that last time I was actually here at this conference was about 2 years or something ago. And
Right.
I often say what I love about South Africa is not only nice South African food, people, but it's actually South African hospitality, which I have to
Absolutely.
say is really what I love. So I look forward to being with you all back in person. Really, my goal over the next couple of minutes that I have is really I want to share with you some of the latest global trends that we are seeing in the crypto space. Really, and share with you all and hopefully empower you with some of this information and knowledge we're saying, and then let you make your own decision on where do you think the future of the industry is going, especially with some of these big global trends that we are seeing. I'm just trying to now to share quickly my screen as we kick off. But really, as I do that, um, here we go. We should be able to go now live. Excellent. Give me 1 second. Perfect. So excellent. If at any moment anybody's not able to hear me or any technical problems, let me know and we'll try to fix it as we always do in the crypto space. So really, before I start, I always want to give my big warning. That whoever tells you they're a crypto expert, you got to run away. As many of you know, and as was mentioned in the introduction, I spent 24/7 of my time in the crypto space, and I have absolutely no idea where this industry will be even a month from now, just because of the big developments that are taking place all the time. As I always like to say, it's a dog world, right? So a week in the space is like 7 weeks in a normal world. Things move very, very quickly. And this is why today I'm just going to focus on 5 trends. That's it. Nothing more, nothing less. 5 trends, let you know what's happening with the latest, and hopefully then you can make your own decision on what's happening, what the impact of some of these developments may be on the global crypto ecosystem. Hope you guys are ready. Let's kick it off quickly and let's jump right in. The first one is really the entry of institutional players. This is an area that's moving super quickly. As you saw over the last 24 hours, even Morgan Stanley has announced that they're actually entering the space for their private banking clients. And really, obviously, the ecosystem has grown tremendously over the last couple of months. Not only we're seeing a lot of the existing industry players become more institutionalized, but we're also seeing a lot of the institutional players enter the market, which is obviously quite exciting from that perspective. From that perspective. The other thing as well is obviously there's a couple of catalysts as to what we're seeing, why this is happening. Obviously, banks are not entering the space just because for the fun of it. There's obviously real tangible reasons behind it. One of them is obviously new revenue opportunities. And obviously, this is something that we're seeing across the board for many of the banks, many of the financial institutions. Crypto offers a space that is greenfield. They can enter, and there's obviously an opportunity for them to have a leading edge from that perspective. And we've seen this in many verticals. A good example is what we've seen on the custody side. Again, only 2-3 years ago, where we were in the era of self-custody, we moved about a year or 2 years ago to having crypto native firms become regulated, to now seeing some of the established financial institutions enter the space. But also there's demand from existing clients, a second big driver. Again, if you're a big bank or an investment bank, the one thing you need to know is make sure you're taking care of your existing clients. And this is one of the big drivers we saw, not only the big asset management side, the hedge fund side, with the likes of, Paul Tudor Jones and others, but also on the corporate side, firms like Tesla, for example, that we are familiar with, or Meitu in Asia, that have now started buying Bitcoin as part of their treasury, and who started one or more increased regulatory clarity. If there is regulatory lack of clarity, that's often it'll be a stop or a block, or at least slow down the entry of an institutional player in the crypto space. And one of the good things we've had right now is actually the presence of regulatory clarity is helping definitely at least take out this concern for a lot of financial institutions. And regulators have been doing their part as well. Today, only 5% of regulators do not have somebody working on crypto. This is according to Cambridge University. So a lot of good work has been done by regulators. I would even argue that in many cases, the average regulator is more knowledgeable than the average financial services professional. And often regulators are not getting the credit they deserve globally for the work they've been doing in the space. One space to watch of the year to come, tax clarity. It's very good to have regulatory clarity. Tax clarity matters as well. And we've seen this around the world right now. Even at PwC now, we publish a global crypto tax report and ranking. And actually, you're seeing in countries like the US now, where every US citizen has to fill up a form stating whether they've actually had to transact in cryptocurrencies or not. Second big trend is the rise of stablecoins. So again, if a cryptocurrency like Bitcoin is great, I can send you one tomorrow morning. You'll be very happy. But again, we don't know what the price will be a week, a month, or a year from now. And this is why we're seeing a lot of rise when it comes to stablecoins, again, which is digital currency backed one-to-one by good old fiat currency. And there's obviously a lot of benefits for this. There's been a number of stable coins right now in the market, from the regulated ones we're seeing mainly out of the US to the non-regulated ones like Tether, which is now by far the biggest one when it comes to trading pairs as well as trading volume, and a decentralized one that I'll talk about later on in this presentation. But really, what's been incredible here is really watching the supply grow. Put things in perspective. At the beginning of the year, and January 1st last year, like 12 months ago, or about 12 months ago, we had less than $5 billion in assets in stable coins. And now we're over $45 billion, really incredible growth when it comes to broader stable coins. But you'll say, Henry, why do we need this? Why would we even try to do this? What's the point of having a stable coin? Again, a digital asset backed one-to-one by fiat currency. A couple of reasons for it. The biggest one, actually, not only you can make transfers around the world instantaneously, there's no cross-border fees, but also it works 24/7. In addition to a lot of the benefits we have on the trading side, where again most of the trading pairs now are with the stable coins, and as well it offers for traders a benefit if you're trading crypto assets to actually, and you think it's too volatile, you want to move away from a position to move it to a stable coin, but again stay within the crypto ecosystem, but without having this exposure or volatility of crypto markets. But a big area, especially for Africa, and I guess it'll be a big topic of this conference today, is really when it comes to remittances. Today the average global fee of cross-border payments is 7%, a number I think all of you know very well. In many parts of the world, including in Africa, it's double-digit. And this is actually, we're talking serious money here today. And actually, the benefit of stable coins allows us to send money around the world, including between two neighboring African countries, globally, 24/7, no fees, instantaneously, and without intermediaries. And obviously, this was catalyzed really a couple of months ago with the rise of Libra. Libra 1.0, I like to call it, that came out in June 2019, which was a day Libra and what it was called back then, and their wallet Calibra, which have been since then rebranded to Diem and obviously Novi, were obviously one of the big game-changing moments, I would argue, in the history of money. Really, since then, we've seen a massive uptake, not only from the entire financial institutions looking at cryptocurrencies and stablecoins, but also central banks. And I'll talk about that in a couple of minutes. And really, obviously, since then, Libra, or Diem as it's called now, has one goal, is to make moving money around as easy, as cost-effective as sending a good old WhatsApp payment or a WhatsApp message or an email. And actually, regardless of who you are, where you're born, what you do, or how much money you have, which I think is a very, very admirable purpose from that perspective. So very, very exciting developments from that perspective. And of course, since then, a lot of the large payment companies have been entering the space as well, which has been obviously big catalyst from that perspective as well. So a lot of exciting developments that have been taking place from that perspective. But the other thing to remember as well, it's not only affecting retail payments. It's basically also we're seeing increase of usage of stable coins by corporations and corporates. Very interesting development there. For example, one thing we've been seeing in recent months is increased number of corporates sending money between them using stable coins, which is a very, very interesting development from that perspective as well. So for a lot of corporates, the financial institutions listening, you may say, these stable coins are just for retail. It doesn't impact me. You got to keep your eyes open. Like anything in crypto, things move fast. And actually, this uptick that we're seeing, imagine how much money is right now in Nostros, Vostros accounts, correspondent banking, corporate treasury accounts that a lot of banks make a lot of money with. So keep an eye on from that perspective on what's happening there. Okay. So let's move on. So basically what we have here, the other big trend I want to share with you all is what's happening on decentralized finance, DeFi. Really, what is DeFi? DeFi is the delivery of financial services without any financial intermediaries. Again, leveraging blockchain technology. Well, you may say, whoa, this is incredible. What is DeFi? So again, there's a couple of benefits. Right now, if you want to make any financial transaction, you're using a traditional financial transaction, let's say a fiat money, you're using the banks. If you're doing a lot of basic cryptocurrency transactions, buying and selling from exchanges, you obviously are using centralized exchanges. The benefit we have here with DeFi platforms is actually enables you, it's open to anyone, and it's permissionless. You can come in, use it, and actually you can conduct it in many cases peer-to-peer, complete decentralized without any financial intermediary, which is very, very exciting, by the way. But there's also what makes DeFi exciting, and there's a couple of inherent capabilities. The biggest one, the one that really excites me, is when it comes to composability, which means today, if you like a traditional FinTech application, that's great. But if you see two different FinTech applications in the market, you cannot just take them and put them together. But the benefit of DeFi is that, let's say there's two DeFi applications you like, it's all open source. You can take them and build something on top of it and really come up with your own DeFi offering, which is what we call the financial Legos principle. So very, very, very awesome what's happening there. I think, and this, what was a little experiment last summer has now obviously grown tremendously. Today, there's over $40 billion locked in DeFi. There was only less than $5 billion as well at the beginning of the year. Tremendous growth that we are seeing in the space on DeFi. And it opens a lot of opportunities. One of them is really think about it from a first principle perspective. Allows it to have a first principle perspective on the world of DeFi. Again, of financial services, rethinking financial service offerings the way we can even think about it, right? So really rethink about what is finance, how we're delivering it. You're not relying on financial intermediaries, as we said, and we really can experiment on a lot of innovative payments, innovative ways, whether it comes to how we're processing services like lending, borrowing, insurance that is now being offered on DeFi as well, even wealth management, with some of these products are offered in the market as well. So very, very exciting when it's happening on the DeFi space. So again, a lot of exciting developments. Number 4, NFTs. Wow, what a change we've seen the last couple of weeks on NFTs. Really fascinating. When I was putting the first draft of this presentation about a month ago, it was not even in the agenda, and I had to add it like 2-3 days ago just because it's become such a big thing. What is an NFT? What is a non-fungible token? It's a digital token that are blockchain native, but what makes them special is that they're unique and not fungible. What does this mean? Today, if I have two $1 bills, they are non-fungible, right? So we have one. If one US dollar is similar to another $1. If I told you I'm going to give you $1, it doesn't matter which one I give you as long as I give you $1. And it's the same thing pretty much in cryptocurrencies as well. If I give you a Bitcoin, it's for all intents and purposes similar to another Bitcoin as well. But what makes NFTs unique is that token is absolutely unique. That NFT is unique and actually cannot be replicated. It's a bit like a Picasso painting. If I give you one Picasso painting, it's not similar to any other painting or any other Picasso. That painting is very unique. And this has exploded in the last couple of months, really couple of weeks. Just to put things in perspective, really, we were talking about less than 3 months ago, about 10 weeks ago, there was a weekly trading volume of NFTs was around $10 million. And now it has reached over $200 million really a couple of days ago. Same thing for the number of users. At the beginning of the year, there was really less than 25,000 users. And now it's over 350, over 400,000 users now and growing by the day. Really awesome what's been happening. 2021 has becoming the year of the NFT so far. But what makes them unique is the fact that they're traceable. Today, if I give you an NFT, not only you know exactly its provenance, you know where it's been, and also the other benefit is actually it's the fact that it's tradable. Again, if I have this little painting that I made here, for example, So just what I think on a post-it, a little picture that I drawn, actually I can now make it easily tradable because it's a digital, it's blockchain native, and it can be a market of, as much people want to believe in this and believe it has a value, it can create some value there. The other thing, it's immutable. If I have this beautiful painting, it's digital native, you know which one is the original. You don't need all these experts that come in and say this is a true, this is a fake. Actually all the entire market of these guys disappears. One of my favorite shows that I watch on TV is shows like Pawn Stars, where experts come in, or antique road shows where they come and look at these artifacts and expert determines if it's a real one or fake one. That is something that disappears with NFTs. And of course, another benefit you have is interoperability. You can have all these pieces of digital art, and actually you can actually exchange them, buy them on different platforms. And because one of the things we have now is we're working on many standardization of these NFT platforms. So very, very exciting developments going on from that perspective. And obviously this really, to give a bit of background, it took off in 2017 with the rise of CryptoKitties, these digital cats that you're able to breed and actually and own. And what was very interesting is actually a lot of these platforms, CryptoKitties at one point at its peak was around really 25% of the network activity on the Ethereum network. So a lot of activity on the CryptoKitties platform, and obviously other platforms came up. Decentralized is one, for example, where not only are you able to buy a piece of land, a block of land on these digital cities if you want, but also a lot of items that you can buy as well on those platforms. But really over the last couple of weeks and months, this has really taken off. Last couple of months, we had not only pieces like, the first Formula One car that was an NFT that was auctioned off, but also we saw a sports league, a major baseball league come up with their NFT, and people starting coming up with their pieces of art. This like one of my favorite ones you see on the top right corner, but also people starting selling some assets they had. For example, Jack Dorsey's first piece of Twitter's tweet, actually, that was auctioned off recently at $2.5 million. But probably what really brought us into mainstream is really what happened with the NBA. Today, a large percentage, by far the majority of activity that is taking place is really happening via NBA Top Shot platform. So very, very exciting going on there, where actually it's a kind of a mix between a sports card and a kind of a video replay put together. And this is actually becoming a big market, NBA Top Shot. For those of you who follow my newsletter on LinkedIn, I covered the topic on my last weekly newsletter on the future of money. Very exciting developments there. Again, you can check it out on my newsletter on my LinkedIn, how I explain how this works. But what really brought it, again, even more into the mainstream media is the fact that actually an NFT was sold last week from the digital artist Beeple for around $69 million, a montage of his 5,000 pieces of digital content that he's put on a daily basis. And you can see his reaction on the right side when he found out that his painting was an art piece was sold for this amount. So very, very interesting development NFT side, something to keep in mind. This is an area that keeps worth paying attention to over the next couple of months. And the last point I want to keep you all with today is really what's happening on CBDCs. Very interesting because obviously I think this is an area where South Africa actually was one of the pioneers when it came a couple of years ago, but also this actually has a big impact on when it comes to the future of money. So let me take a step back first. If today you're a central banker, and I know many of them are regular central bankers are listening to this session, if you're a central banker and you love Bitcoin, you're crazy. It's a bit like a taxi driver being excited to see Uber come in the market. However, central bankers are not stupid. They realize there's a lot of benefits to central bank digital currencies, and this is why many of them have been exploring the topic. But first, what is a CBDC? Again, if Bitcoin is decentralized, nobody controls it, it's purely driven by offer and demand. A CBDC is a digital form of central bank money that is issued by the central bank, and it becomes part of the monetary base of that economy. So what that brings up, again, if I put my professor hat on for a second, today there's really two kinds of central bank money. One is the good old cash that you hold in your hand, which is a liability of the central bank. And second are the reserves that your lovely bank holds at the central bank. The money that you have in your bank account, as lovely as your bank is not central bank money. It's literally debits and credits or accounting entries on the books of that bank. And what's really exciting now is really what's super fun is all of us, all of you listening on this session today, in our lifetime, we're probably going to see a third form of central bank money, a central bank digital currency, basically a digital banknote. And that's super exciting because really it enables the public to hold basically central bank money in a fully digital format. And obviously, there's a lot of benefits for that. I mean, let me give a couple of examples. One is better visibility on the impact of monetary policy. Today, if a government or central bank enacts a certain monetary policy, it's very difficult for them to measure its real impact. Yes, we do these surveys, we do this GDP estimates, but it's all pretty much all finger in the air. And this is actually also help solve another problem, which is the black economy, which is a problem we have in many countries, including in South Africa, where obviously any stores that are operating cash, it's very difficult to monitor from a tax perspective, but also to able actually to contain monetary policy. And also another benefit we have is with CBDCs is for the first time in a very long time, it gives us a fighting chance against money laundering. Again, today, despite, according to the World Bank, between 5 to 7%, actually the amount of money laundered every year is equivalent to somewhere between 5 to 7% of global GDP. That's between $800 billion to $2 trillion. And despite all of our great efforts, we're able to combat less than 1 to 2% of laundered money. The good thing is with CBDCs for the first time, we give us the potential, a chance, or the fighting chance, to try to combat one of the biggest issues we have today in the global financial sector. And there's many other benefits as well, from alternative to the existing payment system to actually enable us to potentially to enable embed monetary policy. For example, put the interest rates directly in the M0 level, which is something we can discuss separately. But one thing to understand as well, there's been actually less demand for banknotes. Because of COVID, there's been obviously a rise of digital payments around the world because people are worried touching banknotes because of the fear it may actually transmit the virus. Ironically, though, around the world, we have record levels of cash hoarding. In most countries right now in the world, there's a record levels of cash in the system. And what is that? Again, happens in every financial crisis. People get stressed out and they try to keep some cash with them at home. And we've seen the effects of this. For example, one of them was trying to give COVID relief funds to many countries around the world. Was extremely difficult because the system was so archaic. But again, central banks have been looking at this topic quite closely. Today, 86% of central banks are looking at this topic. 86, which is quite remarkable. And if what's even more funny was only 3 years ago, the BIS, the Bank for International Settlements, was saying, we don't need this cryptocurrency thing. It's actually a poor substitute for the solid institutional backing of money that we have. And actually, this is why. And also, there was quite negative comments as well. There was a lot of concerns from policymakers saying, whoa. This cryptocurrency or the CBDC thing is actually interesting, but there's a lot of concerns that we have. And obviously, many of the concerns was on monetary sovereignty. Again, if let's say something like Libra becomes very easy to use, this may cause a concern for many of the countries, there are maybe not G7 countries, whereas people may want to prefer using the digital format. And there's obviously a lot of concerns on financial stability from FSB to achieve concerns on bank funding. Because one of the risks is if you have a digital currency issued by the central bank that people could easily hold on their digital wallet in case of financial instability. Today, if you don't trust the banks in South Africa, for example, you can go to your ATM, try to withdraw all your money, but there's a limit of how much money you can physically withdraw and be in a safe manner. Again, but it's a CBDC. You can withdraw a lot of money pretty quickly on your digital phone and your digital wallet, and that may accelerate a run on the banks, which is a big problem. Policymakers are always afraid. And this is why we've seen increased levels of discussions around this from central banks around the world. And again, one thing to understand as well, it is really two kinds of CBDC in the market. There's wholesale CBDC, that is between the central bank and the member banks. And there's retail CBDC, which is digital kind of central bank money that you, the public, can actually touch and hold. And really what's been interesting over the last couple of months, we've seen tremendous activity around the world. Many countries actually have been experimenting with various forms of wholesale and retail CBDC. While wholesale CBDC is very interesting, it's great, where the activity or where the action is really is when it comes to retail CBDC. That is where the activity is. I can give a whole separate keynote on retail CBDC, but I want you guys to be aware there's a lot of activity in this space. And I'll finish it off with one topic, which is I get asked a lot as I head off to my last minute of my presentation, is really what's happening on China. Make no mistake. Today, if you're looking at the future of FinTech, your eyes should not be on Silicon Valley. Your eyes should be on what's happening in China. Same thing happening on the future of money. Today, where the future of money now is being experimented is not in London, it's not in New York, it's definitely in cities like Shenzhen and Beijing. China has been researching the topic of the digital yuan since 2014. To put things in perspective, the Bank of England released its consultation last March of 2020. So China has been looking at it. They've been experimenting now various approaches of how they can actually get rid of what we call M0, which is kind of the cash in the system. And really, China is not only years ahead. I would personally argue that China is 4 to 5 years ahead of the rest of the world. But even on the pilots they've done so far, they've handled over 2 billion renminbi. That's $300 million US. There are over 12,000 use cases and over 100,000 wallets that have been used, experimented with. And really, I mean, just to put things in perspective, even the big Chinese digital banks are now entering the pilots. They're entering all these the process to experiment with this digital yuan. And even they've launched a lottery. You know, a couple of weeks ago, even the Shenzhen government, there's been many of these, but just to give you one example,
Sure.
has done a lottery where they've been actually sending to 50,000 people $30 of digital money. There's a central bank digital money that people can withdraw and that can use from that perspective. So really exciting developments going on. And again, I close it off with my warning. Again, as you saw, things are moving very quickly in this space. But again, be careful. Anybody tells you an expert, run away. But again, keep your eyes on it. Again, it was a pleasure sharing with you all today. There's many ways to keep in touch with me. Probably the best way is, again, if there's my email there. But also, if you like the content, you can follow my 60-second weekly video on LinkedIn, the Crypto Capsule, where I summarize in 60 seconds what's happening. And also, I have my weekly newsletter. You can subscribe here, where I talk about the 3 big ideas of that week that you need to know. And I'll be launching my shows on Clubhouse and other shows. You can follow me on Twitter, YouTube, and LinkedIn.
Awesome.
That's all for today, guys. Thank you very much. It was a pleasure sharing with you all.
Thank you, Henri. Thank you. Really appreciate such content, so much in depth.